I'm going to teach you guys the unicorn. This one is the strongest algorithmic model. There's a lot of good talk about it, and I kind of see why. You learned about this in the 2022 mentorship. This could also be considered first or second leg redistribution of a market maker buy or sell model, but this is kind of a good example of it. I'm pretty sure I have more, but right here I'll explain to you what it is. So, the unicorn, it's a fair value gap plus a breaker block, and that's, if you already know those two PD arrays, you're perfect. But this video is for the people who don't know what it is. So, fair value gap, I mean, there's so many videos explaining, it's just a little gap in price where there is no wicks. I should pull one up right now. This is a good example. Even though it got ran through, you could see this, there's no fair value gap, there's chop, 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 chop. Then we have this bearish fair value gap right here. That of course got ran through because we're pushing up higher, but this is the recap from today. Ooh. And here's another example. We have a bullish fair value gap because we have these wicks. The wicks usually cancels out any type of fair value gap. You can see we had some fair value gap action right here. Right here. Just a big candle with no wicks covering. Of course there's no gap right here. There's no gap right here. There is a gap right here. And this, I mean, we swept up this high. This is a unicorn, which I did not see until I just made this or started the recording. So, breaker block, which is just this low right here. This is a breaker block, which bearish breaker because we ran up, we swept up this high right here, right here. Now let's see this, and bearish breaker, went forward into the fair value gap. Here's the gap. I'll mark out the gap for you. Fair value gap. So now we have these two PD arrays. So this makes it a unicorn, and I wouldn't really take this one because it isn't as probable as I'd like, but unicorn is a unicorn. Boom, you put your stop. I personally put my stop at mean threshold of an order block. We don't have one though, so I can sometimes just do the wick right here. As long as it's under, I'd say 12 handles or 12 handles max, then I'm fine with it. And what do we target out? I kind of like targeting 40 handles. That's kind of the standard for me. 40 handles and I'm happy for the day. But that's just me personally. Okay, back to this. And here's some more examples on the right, and I'm pretty sure I have more. But here's my personal notes on the unicorn. Okay, so you're just gonna hear me talk. In episode 23 to 33, I don't remember the exact one of the 2022 mentorship, ICT prefers a fair value gap between a 1, 2, 3 minute, 4 minute, 5 minute frame. So I'm going to pull this up, and just for example, we don't have a fair value gap on the 1 minute, but if you go on the 2 minute, we do. That would be considered a unicorn. So right here, imagine if we didn't have one, just pretend that we actually went back in this and traded into it. We're on the 2 minute, and we had this low right here, and this isn't, oh, this is, we have a breaker block right here. And we don't have a fair value gap on 1 minute. We want to scale up. 3 minute, any type of time frame that has the breaker, as you can see right here, this low ran out this high. Breaker block plus fair value gap. Oh, we tapped into it. Tapped into the breaker plus fair value gap. We went lower, took out this low, which when you're trading, you want to be taking out really consistent and small targets. You don't want to be calling out tops. You don't want to be calling out bottoms. You want to get out wherever you see price fit. So you could get into it off the tap. Where would your stop be? I mean, I already said mean threshold, the order block. Oh, that's kind of hard for me to explain. Okay, if you know what order blocks is, mean threshold is just the middle of it. Sorry about that if you guys didn't know. So just the middle of the order block. I don't go above 12, and you guys know that. So let's just say 12 is max. Personally, I like 8 or 9 handles. But you have to get your inches really down, and you want to target our low-hanging fruit, which is just a fancy name for the first low that we see. So that would have been another decent trade. Yeah, you just scale through each time frame, and if there isn't a fair value gap on the 1 minute, 2 minute, 3 minute, 4 minute, go back. 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, then there's no trade. And typically a 50-minute unicorn is the strongest and the highest probability because usually we tap into those, we shoot off immediately. So I could look for one real quick. I'm also going to back test, so the video might get a little bit fussy, but no fair value gap here on the 15-minute. And let's see. Okay, I'd say that this is a good example. So we have the high right before we ran out. Whoa. Okay, so we had this high and this fair value gap right before we ran out this low. So when we sweep liquidity, the high right before liquidity sweep, that is a breaker. We drag it out to the right. We do have this fair value gap in the wicks, if you want to use the wicks, because I use the wicks of the breaker. Just barely tapping it, but you can see on the 15-minute, what do we do? Tapped into it, respected it, and of course this isn't going to be the breaker. I only use the wicks. But the breaker also lines up the fair value gap. And for example, I like to scale down just so I could see. So let's just hop on the 5-minute and we'll see. You'll see what I'm talking about. Oh shoot, we made a fair value. Oh wait, no. 4 minute. Let's see if we made one on the 4 minute. We did make one on the 4 minute. Perfect. and we're tapping back into it, and that's where your first entry could have been off. So you could have went long off the first tap into it because we created a 4-minute fair value gap, tapped into it, off the breaker, boom, you already made money. Wonderful. But wait, it's still open? Oh, might as well. No, I'm kidding. Don't actually enter off of it once it's done. This is just an example. But since it's on the 50-minute and we're pushing up higher, I would say that it is okay just because we're turning into a discount of the range. So, boom, turn to discount. Oh, wow. Magnificent. Ran up that high, that would be our final take profit. And I think this is how much handles. 72 handles and stop. We could have had a less than 9. It would have been good. You could also done the end of the fair value gap, but that's only if you have these really tight, risky entries, or if you're really confident price is going to move. That's where we use OTE. I'm going to teach a whole different video showing OTE unicorns, entries, market maker models, everything. And there we go. Typically paired with OTE. So here's some more examples. Breaker block, 5-minute fair value gap. Tapped into the, what was it? We didn't tap into anything. Sorry about that. But we tapped into it. And we ran out low right here. This is a market maker buy model. Ran up. This fair value gap right here. Tap back into it. Could have targeted longs. And this is another example right here. 1 minute, 2 minute, and 3 minute fair value gap. And we have a breaker. Swept out this low. Another break right here. But we didn't create a fair value gap. That is no play. But this one right here. This is a good one. You could have targeted out this side. I don't know why I didn't. I had the full image out. I want to show like a learning example. But I didn't really do that. So I'm going to walk you through it. Show you guys how you can find it. How you're supposed to risk it. And let's hope I don't mess it up. So, let's choose a random date. I already had it set up before the video. Good dates. 2024. Okay, I'm sorry, but 2024 won't work, so we're just going to do 8/27/23. Okay, let's do this. Actually, I don't really know anything about dates. I'm sorry. So, let's just do this real quick. NQ. I don't know what the 8th is. We're just gonna, not August. August is probably the worst. We can go into November. Boom, that one. Unicorn. Okay, let's do this. So, if you're using FX Replay, just hack their free trials. Just keep getting free trials. Don't actually pay for the subscription. So, all we're looking for is just that one setup. All we're looking for during New York time, the time we typically trade at, we are just looking for buy or sell model and a unicorn. So that's the only thing we're going to be looking for. 9:30 or 30 a.m. So we already did have one right here. Sweep, this is a unicorn right here. Just because market maker buy model plus breaker, we did not go back into it. Unless you want to start using these higher time frame examples if you want to hop on the 5-minute. But that's not really a good example. So I'm only going to be solely looking for these. And New York opening. Oh, we tapped into the unicorn. I mean, I don't think we would have taken this realistically, just because of how off it is, and we just swept out this low. Oh, wow, another unicorn right here. So if you're looking for this one setup, you're going to see a lot of them, but I'm going to try and being really slow this time and break it down for you guys. So I'm just going to keep scrolling through it, wait for a correct example to show up. Shift in market structure. There we go, that's good. Okay, now we have a breaker block. And I also need to teach you guys how to manage losses with this too. 4-minute, 5-minute, there's no fair value gap there. So even though that this is a breaker block and an order block, it could work out. We did not have a fair value gap. So no fair value gap, no trade. And there we go. It's working out. Boom. We don't have to stress it. We followed our rules. Mitigation block right here, which is just the second one. This isn't going to be a unicorn. This is called a mitigation block just because it's directly after the, what was it? Breaker block. So this one that swept out this high, this is a breaker. Anything after is a mitigation block, and anything after that is an IOFD. You could just use fancy names for it. So let's just say that you got emotional, you want to chase it, and you wanted to chase it down to original consolidation, low hanging fruit, whatever it was. I'm gonna show you. I don't know where. Just think about where you're gonna put your stop real quick. My stop loss would be put it wherever, mean threshold, wherever you want to put it. Boom, you have gotten taken out, and boom, you have got messed up. So just keep in mind. Just like this, do not chase trades. If you think the market's going to go down, if you think you see a unicorn after the actual entry has presented itself, you do not. I mean, you could just say this one right here, but I don't really see any type of sweeps of lows right here. And I only typically use them after a liquidity sweep or inside of a market maker buy or sell model, and I have a separate video on that. So I'll just keep pushing through this. You want to see a liquidity sweep, and you might see a unicorn that I might not, because I'm just pushing through this pretty quickly. So boom, boom, What's this right here? Okay, so did we sweep out any type of lows? We just swept this low and we had a shift in market structure on this time frame. And I'm not really looking at the higher time frame, which is kind of a bad thing to do. It's a bad habit. You always want to have the higher time frame align with your trades. But right here, this is our breaker block. This is our fair value gap. Let me go on the 2 minute, 3 minute, 4 minute. This 1 minute fair value gap that we are tapping into. And it also is starting to look like a market maker buy model. So what would we do? I'd be fine with going along here. Even though we could be pushing lower. Oh. Could be pushing lower. But still, conservative targets, you want to be targeting low-hanging fruit. You don't want to be taking out the biggest moves. Or you could be smart and see if we return into a discount or a premium level range. And you might realize here, we already returned into a premium PD array. And it's not really going to align. But I'm still going to take it anyways. Because it's a unicorn. If some people want to take the model, or if some people want to take the trade, that's on them. See? And that's why you always have to have a higher time frame narrative bias. You can't just blindly be taking these trades without any type of hindsight. You always want to be looking ahead in the future. So we're just going to keep our low daily range intact right here. Keep everything in mind. And I think we're just going to wait until the PM session. So boom, 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 boom. Okay, PM session. No breaker block here. It's kind of sad. Yeah, we didn't really sweep out any highs either. Okay, this would be considered a breaker because we did run out this high, but that's higher time frame stuff. So if I scale out and focus solely on the higher time frame, we want to see displacement through this low. Okay, and now since we swept out this high and we were pushing lower, I think that it's starting to look like a more higher probability unicorn. And if we return back into this range, it should be instead of our optimal trade entry, which everything looks good for a short. So what do I say about mean threshold? And what are we targeting? Original consolidation or conservative targets, these equal lows. So sell limit, okay, tagged in, and yeah, okay, if this happens, just put your stop to break even once it already pushes below this low, because this is already a whole buy model that I kind of skipped out on. So swept up this low, pushed up, shifted market structure, which you do not need to close above for a shift in market structure shift. And that's why I like to have mean threshold the order block. It would have given you a second chance if you have held your sell stops, but at this point I would have said stops to break even once you already had this initial push lower. And of course I'm still expecting price delivery to deliver it to these lows or to our second standard deviation, but should be chilling. Hold up. Okay, after a quick phone call, I'm back. So of course you can see our price delivery still remains the same, and having stopped at what was it, mean threshold order block, you could have held through it, and that's why I like it, just because if we respect it, you don't really have anything to fear, because it's my favorite place to put my stop losses. And where I'm expecting price to go next, I mean, the best way you can decipher that is just with our standard deviation. Equal lows got ran out, obviously swept these equal lows. Okay, so with that in mind, we don't really have a fair value gap, but we can look in the 4 minute, 3 minute, 2 minute, 1 minute. Nothing. I'd be done for the day because 250, that's a little bit too late to be trading. Okay, let's get one more and finish the video up. Oh, this is choppy. That was not a good idea. We still banked though, or we still had one good trade. Okay, let's see this. 930. Okay, first buy or sell model. That's what we're looking for. Ran out this high, ran out all these highs. We do have one right here, but I think our opportunity is already gone. We didn't even get tapped back into it, but it doesn't matter. That's outside of our trading time. So I don't recommend looking at the 1 minute. I want you guys to look for higher time frame PD arrays. Like, I want to see if we tap into an order block, 50-minute order block, fair value gap, like what I'm saying right here. Tapped into this one right here, and we rejected off of it. You want some higher time frame hindsight just to give yourself some bias. Oh, this isn't one yet. I'm gonna keep our discount level marked out. Tap into the discount fair value gap. Okay, now we're starting to have reaction lower. I mean, it's too choppy right now. I wouldn't say any trades should be taken, even if you do think you see a unicorn, which there is none right here yet. So this high, since we swept out this low, this could start to be considered our fair value gap, but with where we're heading in the market, I wouldn't really want to take longs. So boom. Okay, pushed up. Do we have any type of different time frame for value gaps? Nope. Doesn't respect our model. No trade. So we're just gonna keep waiting it off just because it's so choppy. Let me see if there's news. It feels like there's news. No, there's not. Okay, it's just a choppy Friday. We didn't sweep out any lows. We just ran out these lows. It's just so choppy. Yeah, it's not really the type of price action I'd want to trade. Low resistance liquidity right here. I literally don't see anything. I'm sorry. Okay, boom. This high ran out, and we might just push a buyer. Oh, TGIF, I forgot. We have retracements on Friday from the little short thing we have. Let me see. Oh, we're already in the PM. This PM session sucks. Okay, yeah, we're definitely not going to find anything too worthwhile. I mean, we did have this high, which could have been a breaker. Let's see, 2 minute for value gap. If we do tap back into this, I mean, you're just going to be following the trend, but no shame in that. Jeez. Okay. So, what do? Ran out this high, which I was kind of oblivious to. Okay, now we are starting to have a way better setup, way better chance. This is looking more like a higher probability unicorn. Do we have any fair value gaps? 5 minute fair value gap. Hold up. Nope, it did not create a 5 minute fair value gap. Just ran straight through it. Okay, so yeah, there's no fair value gap, no trade. Nothing to be stressed out about. Man, I never thought it's... Actually, let me find a different day. I went a little bit too far. What is this? FOMC. Also, don't trade FOMC days. We're gonna have to skip out on Tuesday. So, no trading FOMC. It's not good. We'll trade Wednesday instead. Okay, night 15. Let's find our unicorn. Search for that one solely. That one model. Okay, no liquidity. Oh, that's a big open. Okay. Jeez. No unicorn. No sweeps down here either, because sometimes after a massive move up, I kind of want to see a unicorn to the side of it that we could reject off of, but we didn't make any, didn't form anything. Ooh, this price action isn't really looking the best. Okay, here we go. Boom. So, for value gap, liquidity sweep, everything lines up. Plus, we just had this massive rush up higher. We did have a shift in market structure, but we're going to be kind of hypocritical to that and kind of oblivious to the fact no more than a 12 handle stop. Oh, I put this upside down. What should we target? You can target equilibrium. So, I know it's probably not what you want. It's not going to be the big profits you expect. But, remember, we're conservative. Boom, tap into it. And run up. And if we tap into our discount PD array, we start pushing lower. No unicorn here. Yeah, that's another decent trade. Let's find one more, then I'm out of here. Okay. My brain just went numb for a second. I'm sorry about that. Okay. Ran out this high, push lower, shift in market structure. And this is our breaker right here. If we have any type of fair value gap, we would be tapping into it right now. Let's see if we do. 2 minute, 3 minute. Oh, we do have one right here. So this would be a market order, but... Oh, it doesn't look good. This one does not look good. I don't think I'd take this. We don't even have a shift in market structure other than the 1 minute. Of course, this would be a unicorn, but I personally wouldn't take it. We could just watch reaction off of it, but I wouldn't take it just because of look at where we're heading. We are definitely being drawn to some high, so I don't want to take that. We would have been stopped out. We need what was it? Better shift in market structure and like displacement like this. This probably would have been way better if I would have saw that. And is this a breaker? I don't know. I'm not experiencing this. I don't know what I'm doing. Okay, 2 minute for value gap. We have to have our stop really tight. Okay. The price action looks a little bit weird, but we can go a little bit crazy. Aim for a crazier target. Oh, we missed that. We did tap into it. Why didn't I get filled? Okay, scratch that. It's a. I didn't say your roll was gonna get filled, so we're fine. Okay, close below this low. Some people would say there's a shift in market structure. Of course, retracement. It's already a little bit too late.